ladies and gentlemen. You're watching Rush Hour with me, Sumita Karir. Of course, the top story today, it was Manic Monday as stock markets around the globe, especially those in Asia, crashed today on fears of a recession in the US economy and rising geopolitical tensions in the Middle East. Widespread sell-offs was seen as investors hurried to move their risky assets into safe havens such as bonds and gold. Japan's stock market plunged on Monday, in fact, today morning, extending last week's sell-offs as the Nikkei plunged over 12%. And amongst other Asian markets, South Korea's Kospi plunged 8.1% before trading was halted for 20 minutes due to the exchange's circuit breakers. In fact, the Kosdaq dropped 11.71%. So investors were selling off oil, crypto, and especially tech stocks. Now, the big question is, how long will this fear last before investors see a buying opportunity? We'll discuss this further with our guest tonight, Anurag Singh, managing partner, Ansid Capital. Anurag, thanks very much for joining us. Let me also go through what the markets are really showing. Global markets, S&P 500 down 4.10%. In fact, Nasdaq also down almost 6%. We are also seeing similar trends in the red, with most indices really reflecting a sea of red, rather. Let me then ask you, is this a temporary panic reaction or a harbinger of a more sustained market downturn, Anurag?
Sumita, look, it is, difficult to project anything at this time, and I would refrain from that. But I can confidently say a couple of things about the markets. One is, we need to keep in mind that the entire S&P and Nasdaq gains for 2024, and much of it in 2023, about 80% of that, was driven by about 6 stocks. Tesla was a part of it earlier, but now no longer. So broadly 6 stocks. Now, when the market is so concentrated and dependent only on that AI story of 6 stocks, I think a correction is waiting to happen. Now, nobody was, who is to say what is a fair value for Nvidia and Amazon and some of these, you projecting those stocks as well on the screen. But the point is, I think in exuberance, we were kind of moving beyond fundamentals, and that correction was waiting to happen. It was long overdue. I think that's happening now. Now, once that happens, it happens all of a sudden because everybody wants the way out of those stocks. And as that happens, there is a level of index selling as well, which brings even the rest of the stocks down as well, right? So I understand the S&P is kind of now more than 10% down from the peak. Nasdaq is now even 15% from the peak, right? In just about 3-4 days, right? So try and beat that. But that's what exactly happens when the market is so concentrated. Right. So, but outside of that,
the big question is what everybody is wondering is, could this snowball into a larger fall, given that lots of factors are now at play? You have the US job cuts, US recessionary fears, elections are also coming up, and then the Middle East conflict that is also escalating. So one doesn't really know where the sell-off will stop.
No, not really, Sumita. Look, we have to ultimately. And I belong to a school of thought where investing is more fundamental than anything else. I understand sentiments have a role to play. But I think the good part here is, one, the economy is cooling down in US, but it is not in recession, right? So we have to understand it is still creating jobs. And that's a great news. Second is, Federal Reserve will come into hyperactive mode and come and support the markets. And rate is something that governs as valuations of all the assets. So I think equity valuations at some point will settle. Now, if you get lost in the index story, that's again getting lost in the story of these 6 stocks. But outside of that, there is tremendous value. So that's one take. The global tensions are here to stay with us, and we've seen this for the last 2.5 years. So I don't take those stories as anything new. US elections will happen. Whatever government is there, there is a policy continuity in US. People have seen that throughout, right? So they don't impact the government policy as much as other markets. Can I leave this with one thought, Sumita? We're talking of US markets, but every emerging market is a very different story. We saw Japan falling 12%. That's one side. But Indian markets are building up a story of their own, right? And they are in a very different territory. And there is nobody can put a reasonable case that they are fairly valued or anything like reasonably valued, right? So that's a very different
Yes, but
story, and
Anurag,
that will play
Indian
out very
markets as
differently.
well. I think there's a lot of bullishness around Indian markets, but they've also said to be overvalued.
Extremely overvalued, Sumita. Considering, I mean, Indian market is standing alone amongst the rest of the emerging market pack, and it has done so for the last 5 years. But I think investors seriously need to take a reality check that returns after 2020, the kind of returns investors have got, and it is very lopsided, right? Large caps have slower returns than mid caps and small caps. That has not been the India story for the last 20 years. So I think that needs a serious reality check. But then again, it is dependent on how the domestic investors pour money in the Indian markets. That's a very different story, and
Right.
that needs a whole different
Right.
program. So
Right. Right. Right, right. So you're saying that it needs a reality check, Anurag. But let me also ask you, the last two falls that we saw during budget time and then election outcome, when the markets fell and the wicks also rose at that time. And if one brought during that fall, one was rewarded. Is it the same as play even now, or is there need to panic perhaps?
yeah, interesting. So I won't take a guess on that, but let me tell you this. Everybody who is an institutional investor understands that Indian markets have probably crossed the threshold of a fair valuation long back. They are all sellers. Who is selling in Indian market? FIIs largely are sellers. They will sell at every rise. Private equity is a seller. A lot of these companies that are listed, pretty recently in the last 3-4 years, they are all held by private equity majorly, and they are all eventually selling. Finally, even some promoters are selling in Indian market side. Who is buying? They're all mutual funds which are riding on retail money. Retail money doesn't look at valuation. They look at the story which has been sold to them for the long term, that the markets will come no matter what, will give you 13, 14, 15, 16% returns in the long term. That thesis is, I think, under question and under serious risk. And whenever there is a condition in the markets where there is a forced buyer, in this case, Indian mutual funds, and there is a choice seller, which is private equity and FIIs, valuations are never right. And ultimately, the retail loses. So that's my thesis. It might take some time to play out, but the decade of 2021 to 2030 for Indian markets, I won't be surprised if the returns are sub 7-8%.
Okay, Anurag, I'll come back to you, but we have some breaking inputs coming in as far as the global markets are concerned. Well, Apple's share price has plunged to 2-month lows amidst broad sell-off as Berkshire halves its stake. In fact, it was last down was 7.3%. In fact, the volatility index is at its highest level since 2020. In fact, shares of JP Morgan are down 3.8%, Morgan Stanley down 4%, and Bank of America down 5%. So markets, of course, are getting spooked, and of course, the sell-off really continues. But I want to understand from you, what does this really mean for portfolio holders, Anurag? Should they stay put, or any change do you see in terms of sectoral rotation, or is it going to be more of the same?
So let's take two markets separately. In US market, Sumita, the great rotation trade, right, which is to say that if you take out 7 stocks from S&P 500, the 493 other stocks, talk of banking, financials, industrials, healthcare, everything else, discretionary, staples, utilities, money was moving to all these 7-8 sectors outside of big tech. That had just started, and that's what seems to be accentuated by this sudden drop now, right? So that AI story, money will come out from these 7 stocks and move into rest of the market. I have no doubt that that will be contained pretty soon. That's the story in US market, and that's the portfolio balancing that the managers are doing here. Indian markets, I think money needs to move more towards those large caps, which are stable, reliable companies, and robustly holding the economy for the last 20-25 years. We know all those 50 companies, what they are. I think those are still reliable and dependable companies versus some of these sectoral themes and these small and mid cap stocks, which have really run way past their prime. So that's a serious correction that everybody needs to do at a personal level. But here's the catch, Sumita. If the mutual fund gets, and this has happened after SEBI categorization of mid, small cap, and large caps, very watertight compartments. If the
Yes.
investor is pouring money into small cap, there is no way that a fund
Yes.
manager can move that to large cap. So that is something which is overvaluing all of
Absolutely.
these
So
mid
you're
and
saying
small
that
caps.
investors should stay put in large caps for the moment. But Anurag, let me get in some more
Absolutely.
information that's just coming in as far as the global markets are concerned. While volatility index is at its highest level since 2020. In fact, Apple shares, like I said, they've plunged to their 2-month lows. Shares of cruise operators as well have fallen on US recessionary worries. In fact, S&P 500 and Nasdaq 100 are down the most in nearly 2 years. Shares of all big US banks are falling. In fact, JP Morgan down 3.8%. Morgan Stanley down 4%, and Bank of America down 5%. So the bloodbath really continuing. I was speaking about the volatility index that is down. That is at its highest level since 2020. Anurag, how serious could this be over the next few weeks? How do you really see the markets shaping up?
US markets or Indian markets, Sumita?
US markets, US markets.
Okay. So Sumita, US markets, I think the post the yen carry trade, gets settled. And once today we have seen Austin Goolsbee, the Chicago Fed president, also giving some indication that Fed will be hyperactive in case it sees further recessionary trends. But I think in terms of market correction, I think let these big 7 stocks cool down a bit. I think maybe today is a day where it all kind of settles, and then the market takes a breather tomorrow, or maybe during the day today. So it all kind of depends on how soon the Federal Reserve now acts. But outside of that, I think we can always look every year markets correct 10 to 15%, and that's a normal correction. Some point in the year, for every year almost, the markets can always correct 10%, and maybe take this as that 10% correction that was anyways overdue, right? By the way, markets are still up for the year, so we should not forget that.
Okay, so this is perhaps a relevant correction you're indicating that is coming for the markets, which was long overdue. And let me also, Anurag, ask you about, it is, of course, a turbulent time for commodities as well, because you're also seeing an economic impact in China as well, and then there's turbulence in Iran and Israel front as well. How do you really see commodities shaping up?
Yeah. So, Sumita, I'm not a commodity expert so much, but we can tell you broad trends. Look, after Ukraine war and after the fall of the ESG, which is the environment, social governance norms off the radar, ever since the world came to confront the realities of energy security post 2022 Ukraine war, I think we are in a new world where commodities will begin to be valued much more than they were earlier, right? When things are going great, nobody cares about these things and everybody talks about good things like environment. But I think people have now begun to realize that energy security and self-sufficiency is something that the Western nations can't outsource to Russia, right? So we have seen that reality check across Europe, where everybody tries to now loosen their strings around these, what kind of energy sources they will have. So we are in a phase where by the way, add to that the environmental move towards the green energy. The greenification of energy is requiring a lot of copper, a lot of metals, and of course, a lot of semiconductors. So I think you will see a lot of deglobalization, which is causing a lot of extra emphasis on dependability on some of these semiconductors and the core materials that go into manufacturing the lithium batteries and EV batteries in the cars. So metals are in a decadal bull run. I think even till 2030, it is safe to say that oil will not breach levels of $70, unless something very unprecedented hits. Copper and even lithium and other cobalt and other metals will continue to rise because the world has suddenly discovered that these metals are not as worthless as they were thought in the last decade.
Okay, Anurag, with that, thank you very much for joining us and giving your perspective on the global meltdown as far as the markets are concerned, and that we're seeing. It's been a manic Monday, meltdown of several indices that we've noted today. The big question again remains what really happens over the next few weeks, and that will be an interesting trend to watch out for. Once again, thank you very much, Anurag, for joining us and sharing your perspectives with us. And
if you like this video, then like, share and subscribe to ET Now.